Video tutorial for the Cash Requirements Report. The Cash Requirements Report contains two types of data: budgeted data and actual data. You are to enter the budgeted amounts for each month of the year. Then you will update those current months with actual activity. This is the power combination of the Cash Requirements Report, and it allows you to see into your financial future. To start the setup for this worksheet, we're going to start with date. On the very first date of the year, you are to enter what you want to be your cutoff day for each week. Will it be a Friday? That's when most are used to receiving their paychecks. Friday is very common, but it could also be a Saturday or Sunday perhaps. Enter that date. Next, you'll want to establish your budget for a month and enter those budgeted amounts every month throughout the year. So let's think about that. In your overhead, you're going to determine the amounts of your overhead budgeted amounts, and you're going to enter those numbers. You can always update this information later as you add or remove expenses from your business. Next, you're going to determine where to start with this cash requirements report. Well, let's start in the current month that you're living in right now. You can always go back later to update previous months with detail. How will you show this information? These budgeted months, the information can literally go at the end of every month, the middle of the month, the beginning of the month, or you can take the time to enter these budgeted amounts by the actual weeks that they will be paid. Only enter these amounts for 1 month and then copy and paste your perfect budget layout into each month for the rest of the year. Cost of goods. I want you to pay attention to this, but we're going to come back to cost of goods a little bit later because I want your cost of goods to match the rest of your worksheet. We'll talk about it. Let's go to marketing. The same thing that you've done for your overhead expenses. You could use your startup numbers, for example, and enter your budgeted marketing expenses for the first month. Once you have the perfect set of budgeted marketing numbers, copy and paste those into the months moving forward through the end of the year. Next is payroll. Do the same. If you're going to have employees using your startup budget numbers, you should know what your payroll should be every month. Enter those payroll numbers into the first month and then copy and paste those budgeted payroll numbers into every month thereafter for the end of the year. This is the traditional budget format that you're probably quite familiar with. But we're not done. We're going to enter your monthly sales forecast numbers. This is going to reflect what you have forecast for the income that you're going to earn this year. Income sources. Update the way you want to see your income recorded. Will everything come through your website? Will you have a website and web stores? Do you also have a storefront? Update your income sources to show the various income streams that your business will have. Next is to determine those amounts of income. Again, are you using the numbers from your sales forecast to show your forecast revenue for the year? Be realistic. Enter what you suspect you will earn for the first month of this report, and then copy and paste those forecast sales numbers into every month going forward, all the way through to the end of the year. Determine where you want to start. Consider that you're starting to promote this month. What month are you expecting sales to come in? What amount are you expecting to earn? Are you showing your sales income as a growing number for the year? I don't want you to overshoot on your projected sales. How are you going to show your sales? You can plug them in wherever you like, just like your expenses. First week of the month, middle of the month, end of the month. Whatever you choose, you can adjust this information later on down the road. Show your projected sales in each month. Copy and paste this information. Now let's go back to cost of goods. If you showed your sales progressively increasing from the current month through the end of the year, well, the more you sell, does it cost you more? Should your cost of goods above increase according to your sales? If so, go to your startup budget, cost of goods, and look at the percentage, the difference between your cost of goods and your sales. It is up to you to determine what the cost of goods will be for each month for the sales that you're expecting to earn each month. Now that you have your expenses and your income budgeted in your cash requirements through the end of the year, look at your bank balance. Each month you can see that your business should be growing. Now, let's start with your beginning balance. Carryover amount. This amount reflects any cash in your bank account that you're starting this cash requirements report with. Assuming you have a balance, enter that balance as of last month's ending balance. So if today is February 1st that you're starting this cash requirements, what was your ending cash balance January 31st? That's the number you want to enter in the carryover amount. This is the only time you'll use this field, but it is very important to start your budget with the right amount. If you look at your ending balance, you'll see this is a progressive running balance from week to week and month to month. Your total bank balance represents your primary business account. This is generally the account that you will pay all your bills from and receive your sales from. But what happens if you have more than one bank account? Just below your total bank balance, add any additional bank accounts below. Investment account, payroll account, savings account, or petty cash. What this allows you to do is visually see your financial picture. On this tab below your ending bank balance, you can transfer funds or document the transferred funds actually by adding and subtracting from account to account. When you put these account bank balances below, now you can see your total financial picture. Let's start to look at the remaining year and how this is accumulated with all of your budgeted expenses in throughout the year, as well as the projected income throughout the year. And we'll see that this is an accumulated number, and all of your information is in here. And you'll see that your bank balance is doing quite well. Here's May, you're at 24. July, you're at 43. August, you're at 53. You've got all the sales numbers coming in. End of September, 63. October, 73. So everything's looking good. You're looking into the future with your budgeted expenses and your projected sales, ending the year at 92,000. So what makes the cash requirements live? What makes this a live budget? What happens is once you've set it up, now you go in to the current week and every week thereafter, and you enter actual activity as it actually happens. So for the week of January 15th through January 21, you're going to enter actual activity as it happens. You're going to enter the expenses that actually happened. We'll put this in here weekly. So here's your month of January and how those live numbers have actually affected everything. You haven't earned any income for January. So now you can see the changes from the updates. You're going to go down and do the same thing for your ending balances in your bank accounts to make sure that those tie in together. You see how it's still off $1,309. So you're going to reconcile your bank statements as well at the end of each month and update those numbers to make sure you can see your financial position at all times. This is what makes the cash requirements report so powerful. You will delete the current month's budget numbers, and you'll start to put those live numbers in the current weeks. One note I'd like to make about dates. At the beginning of the month, no matter what that first week is, January 1st is data that's entered from the 1st through the 7th, because the second week starts on the 8th. So the second week's data is from the 8th through the 14th, because your third week's data starts on the 15th, etc. So make sure you get that. Look at February 5th. So it's a new month. So data goes in the first week of February 1st through the 11th, because the second week starts on the 12th. So those are the types of things that I want to make sure you don't get confused about as to, well, where does my information go from 1 through 4 because this week starts on the 5th. It's the first week of the month. So data always starts on the first day of a new month through the end of the following week. Same thing for March. When you go into March, it also ends on the 5th. But that first week's data is March 1st through the second week, which is March 11th, because the second week starts March 12th. This is an ideal budget that I think many people should use. Not only does it allow you to see in the future, which is the most impactful information, it shows you your financial position in all of your accounts, and it really keeps you in line with where you are at any given time. Even if you have an unforeseen circumstance at any given point or any given week, and you need to spend a lot of money on machinery, or your car went down and you need to buy a new car, something major. When you plug that number in, being able to look into the future will instantly show you in about 3 weeks or 3 months or how much ever you spent, that impact is going to affect you in 3 weeks or in 3 months. You're going to see your bank balance number drop in the negative because of what you spent today, that major purchase you made today. You'll see in the future where you're going to really be in trouble. So these are the types of things that I want you to look for as you start to use your cash requirements report and get the most value out of it. The other thing is, although you established your budgeted numbers at any given point in a month, that's fine. But as you get a little more comfortable with the cash requirements report, adjust those budgeted numbers that are going to be the same every month. Your cell phone is always going to be $52.99 every month on the 15th. Move that budgeted number, because once you start to do that, that's information, that's work that you don't have to do, because legitimately on the 15th of every month, whatever week that falls into according to how you're dated here, that's going to happen. So that's real-time information that you can actually count on. It is other fluctuating numbers that you're entering in week after week. You went to lunch with a potential business partner or customer and it was $42.13. Those are the adjusting, fluctuating numbers that you are most concerned about, because you're really sticking to your budget, or you should be. So, your mortgages are the same, your utilities may vary slightly. Those will have to be updated appropriately. But once you start to have those auto pays come in, go ahead and adjust your cash requirements report. Play around with it, work with it, but get the most value out of it, because it is an indispensable tool that I highly recommend.